Just a few things. Yes, this will be recorded. So if you got to leave early, I mean, it's Sunday morning, that's fine. It will be recorded. I'll be sending out the replay later today, and it'll be posted on our YouTube channel. And another question I get about the bar gaps indicator is it is for NinjaTrader 8. It's not available yet for Go Charting or Sierra Charts or any other trading platform right now. It's for NinjaTrader 8. Okay, so let's jump into it real quick here and take a look at what the bar gaps indicator is all about. All right, so the bar gaps indicator, right, is over the years, I've talked about value gaps, and it confused traders because there's other concepts out there, the fair value gap, and people would ask me if they're the same. They're not. Right? A value gap that I discuss in the order flow is specific to actually taking apart the value, okay, and looking at it on a bar by bar basis. The fair value gap, which is put forth by other people out there, is basically a price action setup, right? And they will wrap order flow around it. They'll say, oh, you have selling imbalances coming in here because this candle wick on the first candle is not traded into, is not overlapped by the third candle. Okay, and same thing with the first, the green up candle, right? You have this area of bar 1, bar 2, bar 3, where the wick or the high of bar 1 is not overlapped into bar 3, and it's just a price action thing, right? And I know a lot of traders will say, oh yeah, you got institutional order flow imbalances. Well, unless you're really looking at a footprint chart, you don't know for certain if there is an imbalance in the market, because by the definition of what an imbalance is you have more directional trade in one direction than the opposite direction by a certain percentage. I mean, how can you, yeah, is there selling in this bar? Of course there is. It's a red candle, right? It's like, don't insult my intelligence. I know there's selling. Obviously the candle closed lower, okay, just as on the green up candle, right? Yeah, there is aggressive buying, but does that mean there's an imbalance in the market, or just a big order going through the market? And again, the logic for when this pattern emerges is it signals a rapid and significant rise or fall in price, leaving little time for the market participants to react. In a sense, right, it creates a market imbalance. That's what people would have you believe. However, a trader can't accurately claim there's a market imbalance without looking at the volume and the order flow, right? Otherwise, you're just guessing, right? You're just saying, oh, okay, yeah, I've got a selling imbalance coming in here, or I got a buying imbalance coming in here. Okay, what's your basis for it? Well, the bars, they don't overlap. Huh? Okay, that's your basis. You're just taking a stab at it. It's just a price action setup, right? And when you add order flow to it, right, what you're seeing on the footprint chart, in my opinion, that validates or invalidates what you're looking at in price action. A lot of traders come to order flow because, when I say come to order flow, I mean, a volume footprint chart, looking at the volume, right? Because once they realize, they've been looking at naked candlestick charts, so to speak, that, they're missing out very important information. Okay, now that's not to say that you can't trade a naked candlestick chart, right, without looking at the volume. Of course you can. People do it. I just find, me personally, and this is what I teach traders, is this information is there. It's available to you. Why don't you use it? Okay, it's one of those things where, imagine, right, like if you're cooking something, and would you cook something without knowing the temperature of the oven? I mean, you can try, and you're going to keep taking it out, seeing if it tastes good or not. But if you have the information, like the temperature in your oven, you're going to use that, right? You're going to use a timer so you know how long it's been cooking for. That's tools that are available to you if you're cooking. And if you're trading, volume, what you're seeing in the footprint chart, is something that's going to help you as a trader make better trading decisions, right? So the bar gaps indicator takes that price action setup, puts order flow around it to give you signals of when you could be taking trades. Okay. Now, in today's little training session, I'm going to talk about a few things. The different ways to use the bar gaps indicators. We have trade signals, levels to trade from, market generated information, which is the support and resistance. Then I'm going to go through the settings of the bar gaps indicator. I might go through that first. Okay, it's because when you're talking about the trade signals, etc., it might be better to discuss first what what we're looking at in terms of setting it up. And I'm going to talk about the markets and chart types, the time-based charts, the tick volume charts, range-based charts, E-minis, currencies, metals, energies, commodities. Now, one thing to note, right, about the bar gaps indicator and a lot of anything that deals with the order flow is you need to have some movement in the chart, because trying to trade a market that's not moving, where it's trading, 1, 2, or 3 ticks, basically trading the bid offer, or sometimes just trading the bid or the offer in a bar, isn't enough movement, right? You need movement, and I'll get into that shortly. Okay, so again, we just started. So if you have problems with the sound, if you can't hear, just log out, log back in. I did a sound check. I know it's working. And again, if you got problems and you can't hear me, just log out, log back in. There will be a replay of this presentation later. All right, so let's sort of go back and take a step through here. All right, so first I'm going to talk, I guess I'll talk about sort of the indicator itself. All right, so let me pull up a chart and sort of go through. Now, the bar gaps indicator, it will work on a footprint chart. Here's my footprint chart. It will work on a bar chart, but to keep it simple for today, I'm going to keep it on a bar chart. Hopefully everyone can see the screen okay. Vitobi says, can't hear. Is anyone else having problems with the sound? I don't think so. We've got 100 people here and only one person has complained about the sound. So let me just ask him to log out and come back in. Okay, all good here. Thanks, Sam. Thanks, Simon. Everybody else? Good, good, good. All right, excellent, excellent. That's what I like to see. All right, so the bar gaps indicator. All right, let me just get the chart here. So it's very simple, easy to use. Okay, so you just got to find it, and once you install it, and it's just a simple add-on to NinjaTrader, right? You just import it as you would any other indicator. So you're going to just click on it, right? Make sure it shows up under the configured part. Then to license, right? You got to click enable, enter your email that you used for it. Now you're going to see zone colors, type 1, type 2, green and red. For type 1, buy and sell. Type 2 is a different, what you call it, different setup, I guess. But it's based off the same. It just looks at something a little bit differently. Now, type 1 is the most common. Type 2 is less common. Then you have opacity. Opacity is how dark the zones are going to be. 30, it's like 30% is, I'm comfortable with 30%. If you want it darker, you could make it 50, 70, you can make it 100. But if you're looking at something like a footprint chart, you still want to be able to read what's underneath the zone. So 30% is nice. Then you'll see parameters, type 1, type 2, or you could have both, okay? I'm going to talk about this show signal. By default, it's enabled. Pair up is just, it's like an extra filter, I guess, to describe it. It's something that's being paired up in the order flow. But by default, it's disabled. It's not something, honestly, that happens a lot, but it was just something that we noticed and we just wanted to put it in there. And then the sound file, if you want to use that, you just enable that. By default, it's enabled. Then, you would go in under your NinjaTrader 8 files to put it in there. And it just uses sort of the default sound file, right? Alert 2. People sometimes ask me, how to create it. Well, if you want to create your own sound file, you know, call it whatever, just drop it in the program files under the NinjaTrader 8 sound, you know, under your NinjaTrader 8 bin. That's what's going to be on your, not under your documents, but under, like, I don't know what you call it, the C drive for the program files. And you just drop it in there and name it. Now, you know, name it whatever. Just gotta make sure you choose it down here inside the indicator. Or what you could do is you have your sound file, just delete alert 2 and change the name of your sound file to alert 2. The other stuff you don't need to mess around with. Data series is obviously what you're looking at. The setup on bar close, obviously the name, bar gaps indicator, maximum look back. You don't need to change that. Visuals, just keep it all on the same chart. That's just where it's going to plot on your chart. Now, buy and the plots, right, how it's going to plot. Okay, so you got type 1, type 2 trades, okay? And by default, it's set to 5, the little triangle up for buys, the triangle down for sells, okay? But it's set to 5 with, if you want it a little bit bigger, I mean, you can make it as big as you want or as small as you want, or you could just disable the show signals and it won't show these triangles. But for purposes of today's presentation, I'll make it a little bit bigger, okay? So important thing is make sure you enter your email under the license and you click enable. Just enter in your email and you don't have it clicked enable, right? Say I just do that, okay? Right? There's no signals, right? I have to enter my email and make sure I click that little box that says enable, okay? So you can see here, right? These little triangles are the actual signals, right? Now, just really quick, there's a couple of things you can do. If you don't want to see the signals, you just want to see the zones being drawn out, you just disable that one that said show signals. Okay, now, why would people want to do that? Well, just turn it back on. There are people that like to trade based off of what they're seeing in the market, right? How a market reacts to a certain level. And you can see how the market sort of comes back to these levels, right? Literally to the tick. You know, there are traders out there that like to sort of buy at the edges or sell at the edges of these levels. Okay, you see how the market literally comes right back to the tick here, right? 97 comes down to 96 3/4 before it rallies up, just like this one came right to the edge. And then it, you know, this is what 99 1/4, bounced all the way up to, you know, 2.5. Right? You can see the zone being drawn out here, right? You can see it literally trades right up to that bottom of that zone and then sells off. Now the actual sell signal doesn't come in until a little bit later because it's reading what's happening in the order flow, right? As well, to give you, you know, it's telling you to get short or telling you to get long. So there's different ways that you can be trading it. Now the difference here, right? If we were to go look at, so I have both enabled, right? You could just have type 1 enabled. Okay, that's the red and green. Type 2 is cyan and magenta, right? That's just type 2. You can see there's less signals. There's one here, there's one up here. There's any more a little bit later, but it's a little bit less common. There's a cell there. Okay, so that's what you got to understand, right? It's not the same amount of trades. It's just type 2 follows sort of different criteria for having that gap. That's why there's less signals. So again, you could use one or the other. It doesn't really matter. Well, I say it doesn't matter, but you could use 1, 2, or both. So, you know, for some people, maybe you want to keep both on. Others, you know, you just want to look at the most common one. Okay. So that's how you're going to trade around it. And again, talking about these zones, right? If you have the signals turned off, how would you trade these zones? Okay, well, me personally, how I like to trade these zones is I look for when, all right, I have a zone starting to be drawn out and it's not traded back into. To me, that's a sign of a market that's potentially getting ready to move, right? You can see here where we're sideways, right? We trade right back into it. It looks like it's going to break, right? Then you get the little pop up, little pop down. So sort of coming down to the difference of should I use zones or should I not use zones? Should I just rely on signals, right? If you just wanted to rely on the signals, okay, what you can do is there's two ways to do it, right? Basically, to turn off the zones, you just change the opacity to 0, right? So I'm going to enable the signals, turn off the opacity to 0. So I'm just seeing the sell signals or the buy signals, right? So I got the sell here, I've got the buys coming in here. And again, a little back and forth, sideways action in here, chop, right? But again, when you're trading, where's the best place to buy? Well, after a sell-off, right? After the market is sold off down to, a new low or a new swing low, potentially you're going to be looking to buy, right? Or if you're breaking out of an area where the market has been going sideways, right? Like here, okay, this market's been going sideways. How can you identify that? You just look at the chart, right? You don't need anything fancy. You don't need to be trying to sell here or buy here. You're still in your range. If you start trading above or below, that's where you look for the signals to come in here, right? Because the last thing you want to do is try and get short here, try and get long here, try and get long here, try and get short here. When here you got clear validation that you're just breaking out. This is simple technical analysis, right? You could use order flow for that, or you could just look at your chart. Okay, I believe this is that area right in here. I've got this one set at, I should make those triangles a bit bigger so it's easier to see. Let me just change that here. Okay, so I'll just make it 12. So it's very easy to see. I think I got them both enabled. All right, so both. Okay, so you see it's drawing. The nice thing about this indicator is we programmed it in a way it doesn't need tick replay to work. Okay, so you can see as we're breaking out of this area, this sideways activity, right? Now you're getting the signals, okay? And if you want to use the zones, right, like down in here, again, there's different ways you could use it, right? You could, look to buy inside of a zone with a tight stop, or look to, maybe just on the other side of it, in front. I'm not one of these people necessarily that says, oh, I've got a bearish zone being drawn here. If it breaks to the upside, I'm going to get long. I mean, I know guys that like to trade certain way, that way, when they have support and resistance, because if this is resistance and it's breaking down, by definition, previous resistance is going to become support, okay? But that's just, it depends on your trading style, right? I like to watch it when it sort of comes back up. If it's struggling to get inside or get through it, that's a sign to me, because I know, right, like at this area right here, right, I have this little zone being drawn out, and I know that, you got this unfinished business, so to speak, the unfinished auctions. But I know the market was bid at 01, offered inside of this zone, and it's not even trading in there. Okay, so to me that could be a sign that this market's going to react, right? Same thing here, it trades right into this zone, and then it starts a nice rally up from that. Okay, now that sort of touches on the the trade signals, the levels to trade from, the market generated information, that support and resistance. Okay, when it comes down into these zones, that's how you could use these zones. Again, it's up to you whether you want to use the zones or not use them, right? The signals, whether you want to use them or not, you could disable that, or you could turn off the zones, or you could use both the zones and the signal, right? It's up to you. If let's turn these zones back on, right? And I'll turn off the signals. And, the next question I know I'm going to get a lot of questions on is, what other types of chart can you use it on? Well, you could use it on, obviously this is a minute-based chart. You could use it on tick-based charts, volume-based charts, range-based charts, as long as there's movements. Okay, so for example, if I was going to look at a 10-year chart, like a 1 minute 10-year chart, well, I'm not going to get any signals, or, might get a zone here and there, but I'm not getting any signals because this market, right, it's trading one tick. Well, I mean, it takes in half ticks, but basically, the minimum tick from 17.5 up to 18, right? That's not going to be enough to, and you're doing that most of the day on a market like 10 years, right? You'd want something that's going to give you some movement, right? Even on a range-based chart, you're starting to see, a bit of movement as well. But again, 10 years, is it let's make this turn the signal on. You can sort of see where the buys and sells are coming in, right? You can see here, right, the sells, the buys, sell, buy, sell. And 10 years is not a market that trades a lot of movement, period, right? Because it trades a lot of volume, so it's a slower moving market. If you're on a different market, I don't know, soybeans, okay? Soybeans, you could look at a range-based chart, you could look at a time-based chart. At least here you're getting a bit of movement, right? This is a 4-range chart. If if you wanted to look at, I don't know, 50 or 100 tick, right? I'd start with 50 tick in beans, right? How's it look? I don't know. Okay, again, 50 tick on the beans is probably not enough movement because you're getting a lot of action where it's just one tick here, one ticks on the bars. Earlier when there is some bit of movement, right? You're getting more and more signals. But if you were to go maybe to a slightly higher range, or 100 tick, okay, this is 100 tick, so it's taking in more trades. You're seeing some more signals. And you can see how this market came right back up to this zone here, right up to this zone here. Market sold off to where you have the zone from earlier here. You got a zone, right? Where did this market, it sold off and it stopped literally right here. Okay, now it got through this zone, got a zone from way earlier, literally came right down to that level, right? So that's a 100 tick chart. If you're on a time-based chart in wait, what did I do? Soybeans. I don't need to go to be NinjaTrader today. The gremlins are out, but this is a tick-based chart. If you're trading zones, does every zone, is it going to hold? No. I mean, we wish they would. But again, it can allow you, that trading just the zones by themselves can allow you to have, some tighter stops. Okay. Markets like, I don't know, that's beans. Let's take a look at gold. Right, this is gold from Friday. Okay, you got that one last zone being drawn out, trades right to it. There's your signal. And again, if you want to use the zones, it just makes things a little bit more visual. If you don't want to use it, you just change it, opacity to 0. Okay, and you can see the buy signals coming in here. Some small shorts, small longs, and then late in the day there. That's gold. That's sorry, coughing there. Euro FX 6E, same thing. Right before that big move up, right? The magenta and cyan, right? That's magenta, that's cyan. That's the type 1 trades. I'll show you the difference here. So if you have just type 1, that's just the green and red, right? The greens and red. Type 2, it's just the magenta here, and cyan, magenta coming in there. So I mean, you can keep both. Again, if you just want to see the zones, right? Or the coming in, where a potential area where a market can stop, right in here, right over here, kind of stopped in here. You get the idea, right? Of how to just use the zones by themselves. Okay, let me just turn this back on. Now, again, if you're interested in bonds, you can always trade, regular bonds. Again, on a minute-based chart, I'm not sure you're going to get enough movement on. Okay, where's the bond futures, right? Again, we're sort of an interest rate sensitive market. The ultra bonds, you're not getting enough signals, right? Just because it's just not the market's a little too tight on a 1 minute chart. You can even, but there's a 15-minute chart, right? There's a sell here. It literally came right back up to the area, came right back up to this area here. And again, it's not just about every single gap that, fair value gap that's taking place, right? You don't see any gaps being drawn out here or signals being drawn here. It's ones that, when we add order flow to, right? Because, there's some in here on this move up, some on this move down. You really want the ones that where you're adding the order flow, in my opinion, make it more effective. If 15-minute chart on E-minis, I don't know how it looks. Okay, and you got this one zone from way earlier, and it really, if you're using zones, as a target, you can see, right? Market came right to this level. Okay, blew through this one, but there was no signal. Here, yeah, it got a little through, got a signal here. You see the market pulled right back to this zone, just chewed through this one in here. Then you're getting these short signals here. This is a 15-minute chart, right, from the earlier, right? Even here, right? You got that sell signal zone coming in. Where did the market come back to and sort of hang around? Came right back into that bigger zone. Now people are going to ask me, is a bigger zone more important than a smaller zone? Well, I don't think so. A zone is a zone, but sometimes I like to think that if it's a thicker zone, it could run into, to get through a thicker zone, in my opinion, takes a little bit more effort. But just because we get through the other side, right, like the zone here, we got through the other side, and it just traded a couple ticks up through, and it came down. You got this thin zone here at 13 and a quarter, right, and expecting the market to come down literally to the tick, and then after you sell off from the 60s down to 13, to stop right at that one tick, and then maybe bounces, is asking a lot because there's a lot of selling momentum as this market is dropping down. That it may not just hit that area and then bounce up from. Okay. Let's just get back to well, let's take a look at some other markets here. MNQ. Well, change it from a 15-minute, because 15-minute MNQ is going to look, this is very similar to the E-minis. Honestly, MNQ and E-minis, very highly correlated. It's going to be a little bit more volatile. Obviously, it's MNQ, but you can see it's trying to rally in here, then get that nice sell-off. And again, sort of talking about, expecting the market to pull back to a certain level. More volatile markets, they don't often come back strictly right to a level and then, turn around and then make their move. Something they'll tend to overshoot it, just as it did, here and here, right? Because it's easy to say when you got a big zone, oh yeah, this zone held. Oh, this zone didn't hold. Well, this zone is only, what is that? 3 ticks, whereas this zone is, 82 down to 71. This is 11 points, where this is not even 1 point, right? So to say, oh, this zone failed, well, it's a very tight zone. This one is bigger, so it's got a higher chance of holding. Okay. But let's take a look at some other markets. I know there's a lot of guys I got here today trade commodities. Commodities are great markets. They follow supply and demand nicely. This is wheat. Okay, you can see, right? There's the open. It rallies up. Where's it come back down to? Right down to this zone before bouncing back up. Okay, this is a minute-based chart, but with wheat, you could trade a tick-based chart or even a volume-based chart. People ask me, what do I prefer, volume or tick? I prefer tick over volume, but that's just more of a personal choice. See, we had this one zone being drawn out here. Market went up on the reopen when the U.S. hours open. It came right down to that level, shot up again. That's a 100. Sorry, what is that? 50 tick. Again, for some people, maybe 50 tick is too fast. 100 tick looks like this. This was, again, you get these days where it's like this. Yeah, you get some small winners. Then there's days like the day before where you get the nice 15-cent move. But that's how the markets are. You can only trade what the market gives you. Nat gas, crude. Take a look at nat gas. Where am I here? Nat gas, NG. Okay, this is what is this? This is a 100-tick chart. Okay, yeah, these levels holding. I mean, you got a big zone here, basically drawn out over several bars. Did it hold? I guess so. But if you're trading on a short-term basis, if you're an intraday trader, I say rely more on the signals than the zones. I mean, you can, try to pick off levels with the zones. Like here, this would be a nice trade to have, right? Like this right here. You just drop in a sell limit order in the zone with a stop just on the other side. You're dropping a buy here, but there's going to be times where you drop in a buy right in the middle of this zone, and then it stops you out. You got to be, if you're a zone type trader, you got to be willing to understand that there's going to be, some stop outs. But if you're trading in a zone, it can give you a big move, right? So there's different ways to approach the market. Which way is the best? Well, it depends on how you're trading. If you're more of a longer term trader, I guess. Well, let's go to take a look at crude here. Okay, this is crude. This is a 15-minute chart on crude. Right, you can see the zone. Now, this is another question people come up. How come there's like a zone being drawn out, but there's no signal, right? No green arrow, up arrow for this zone. It's because even though you got the zone, the order flow that's taking place inside of, that's causing this zone, what's also taking place, because again, it reads what's happening after a zone, after a gap is appearing as well, because it's one thing to have the gap, right? You want to have some order flow inside there, but you want to also need the complementary order flow, the order flow that's coming in after that's been made, okay? And it just wasn't any coming in here, right in here, right in here. It doesn't come in till here with this little gap, but you can see how crude, oh my gosh, where are we trading crude? 90 bucks, better fill up the tank. But 15-minute chart, right? I mean, we ran out of time on Friday, but it came right back up to this zone here. I don't know, man. I don't know what's going on with this price of gas, price of oil nowadays. I think it's going to skyrocket. But that's just my own opinion. But nice moves down, nice moves up. Okay. So I'm going to spend some time now. I'm going to take a look at some of these questions in here because there's a lot of questions. Okay, one asks, just a question about the gap. Can you show us some of this, your indicator and the one integrated into NT8? Are they different? I don't know which one you're talking about that's integrated into NT8 one, so you'd have to clear that up. The bar gaps indicator, again, is not a footprint chart. It's reading the price action, one, which you don't need a footprint chart for, but two, it's also reading some of the order flow going into, I'm not gonna get into what it's reading, but it's reading some of the order flow in there, okay? GT had asked, how does this indicator work together with Delta Scalper? Well, it reads different things in the order flow, okay? So for example, right, if, well, let's go back. We'll go back to the E-mini chart, right, which I know a lot of you guys trade. And go back here. Let me just add on, make sure, okay. Again, you can use this indicator with or without tick replay, okay? So you see tick replay is turned off. But if you're using an indicator that requires tick replay, like Delta Scalper, yeah, enable tick replay. So it'll work with tick replay on or off. And again, if you're using one that requires it, like Delta Scalper, we'll just keep it on here. Now, it's blue and red. What I'm going to do is I'm going to change this color because I don't want to confuse signals. For a sell, let's make it a purple. Okay, so blue for buys. It's reading different things in the order flow. Okay, so hold on, it's just calculating here. So you shouldn't get the same signals. Will some signals overlap? Potentially. But let's just pull it in here for most of the day. Okay, so Delta Scalper coming in here. I think there was a signal that overlapped in here. Delta Scalper is the blue buys in here. Okay, there's Delta Scalper here. A couple overlap coming in here. Delta Scalper, you know, a little bit in that back and forth in there. The purple is the Delta Scalper sells. The blues are Delta Scalper buys. So again, it's, you know, will there be an overlap once in a while? Perhaps, but not that often. Okay. Timothy has asked sort of the same question. Does it play nice with other indicators you have on the chart? Yeah, I mean, you can see it will work with other indicators. Say I just want, you know, something completely different. I mean, I don't know. I'll just throw in Bollinger Bands, I guess. Okay, I'll just leave the default up there. Okay, if you could see the bands are on there, it's fine, no problem. Delta Scalper is coming in shortly. Still calculating because it's got tick replay on. Honestly, if I had disabled, right, if I take off Delta Scalper, you know, I'll just throw a bunch. Let me do something first. I'll take off tick replay. Okay, so you can see there. So there's Bollinger Bands. I could remove Delta Scalper. I don't need that. Yeah, I don't know. I could throw a bunch of stuff on here. All right, so you know, you can see it's still giving you the signal. So if you want to combine it with, you know, any other indicator that you have, you can. Chris had asked the signals, you take an entry. Yeah, I think, you know, if you're using the signals, I think it's best to use them if you're a shorter term trader. If you're more of a swing trader, you know, trading on a 15-minute chart, etc. Then you'd probably want to use. You probably don't need them. You just, I would more rely on the zones. Does it work with MNQ? NQ? Yeah, it does. Right, this is MNQ, NQ. Okay, try NQ here. You know, MNQ and NQ is going to be basically the same signals. The trade's very similar. Let me just clean up this other stuff off my chart. Okay. Let me see here. Well, Manny, the magenta colors All right, again, it comes down to colors because there's two types of signals, right? There's type 1, type 2, right? Buy type 1, sell type 1, buy type 2, sell type 2. Buy type 1 is green and red. Buy type 2 is cyan, sell type 2 is magenta. So it's just to differentiate. And if you want, keep them both the same color, you can. I just, we had them separate because originally when we were testing them, we just kept them separate. I mean, I could have lumped them in there together as all the same, just keep type 1 and type 2 on the back end. You guys would never know the difference and just put it in there. But, it's just an option. I know some people, they like to sort of optimize for a market, and on some markets, maybe you find that type 1 or type 2 works better than type 1 on a certain market on a certain chart type. Okay. Does the zones follow traditional bar gap price action or something more specific in the order flow? Well, that's a good question because it does. Well, obviously, it starts at that price pattern. Okay, that's like the beginning. And then what it's doing is it's reading some of the stuff that's taking place in here, right, on the footprint. So while it does rely on what you're looking at, it starts as a basis for this, with, for example, right, this is why, you don't see a signal coming in off of this gap here, right? Because, off the original signal, it's going to be, bar 1, bar 2, bar 3, where you have this gap in here, but it's not giving you a buy signal, okay? Just because it's not following what we're looking for in the order flow taking place in here, that's going to give us a decent signal. People say, well, it did go up. Yeah, I mean, it did go up, then it just eventually melted down. And along the way, you're sort of seeing other, gap here, which sort of trades back up through, et cetera. So we've sort of gone through the different scenarios and what we like to look for. Because, you can say, well, there's a gap here, right? You got bar 1, bar 2, bar 3. Okay, and it did go up, then it just came right back down and would have stopped you out. So there's certain things that we look for in there. Juan, does it include filters? Not really, no. We try to keep it simple, because you don't want to be filtering stuff out. We do have this pair up, which I don't want to say is necessarily a filter, but for example, here, I don't know if you can see it. It's just going to give you maybe an extra 1 or 2 trades a day. It's just reading something, where it's sort of, pairing something up in the order flow. But it was one, should I take that piece out or not? We just have it in there. Does this work on non-time charts like Renko? Well, it'll work on charts like, whoops. I don't like the Renko that's on here, the NinjaTrader one. There's a lot of good, better Renko charts out there. I don't think it's going to show up on here. I mean, I could be wrong. Oh, it does. This is the NinjaTrader Renko chart, but I'm not a big fan of it. I just find there's other charts out there, from other vendors, like the Uni Renko type charts, I think are more useful than this NinjaTrader one. I mean, it looks beautiful on this, but I don't use that one. Who is it? Pablo's got one. He's got a nice free one from the Indicator Store. You can go to his website, theindicatorstore.com, and download it. You just put it in your cart. You got to go through like you're buying it, but it zeroes out at the end. Heikinashi charts. Give it a second here. NinjaTrader's acting up on me. Okay. What do I got? Okay, I got both on here. You see on this Heikinashi chart, it's only showing type 2, magenta and cyan. So there's the magenta signal there. A couple cyan. cyan. And it's probably based off of how the bar is formed on a Heikin-Ashi chart more than anything else. Obviously on a footprint chart, it'll work. Bar chart, what other charts they got on here? There's a lot of, I showed you volume, range, time, tick, works, Heikin-Ashi, Renko, point and figure. I don't like the point and figure that's provided by NinjaTrader. I don't even know if it would work on there. Not really. I mean, I see a magenta zone here. I think that's all you're going to see. So not on the point and figure, but all the other chart types, So for example, volume, I don't know, 1000 volume. Right, this is 1000 volume on the NQ. Okay, so it does work on those non-time charts. Enos, yeah, okay. I'll send you a special link for that, Enos. I did see your email this morning. Yesterday, I wasn't really answering emails because it's Saturday. Saturdays, I'm just flat out busy with kids' activities. But Enos, I just haven't gotten to your email. Are there exit signals? Venkat had asked. Well, if you're using zones, right, these can be potential targets if you're long or short, right? If you're long, because at the end of the day, a zone is being drawn out as an area where the market can stop. That's one of the reasons why we use these zones, because it can stop and reverse, right? See, stop and reverse, stop and reverse, stop and reverse. Obviously, stop and reverse here. This little tiny one here, stop and reverse. Steve, can you try volume based? Okay, well, this is volume based 1000 volume on NQ. Okay. Anthony asks, what's the trigger in the order flow that generates the signal? Well, it's a couple things, right? Obviously, there's imbalances. There's going to be volume and point of control. Jared, yeah, I'm going to be making a video on markers with this, but it should not be a problem. Stephen asks, how does it compare with the order flow pulse? Well, it reads completely different things than the pulse together. So pulse, what do I got here? NQ, just really basic pulse. Long bars. This, what colors? It's going to be blue and red cell signals. I wish that there was a good orange color here. It's not really. The orange on NinjaTrader looks like still looks like red to me. But we'll see here. Oh, I don't have tick replay on. But again, pulse reads something completely different in the order flow. But does that mean that signals will not overlap? No, you still might see some overlapping. Like the blue here's pulse. I don't see any cells on this chart. Back here. So it's mixed in here, right? You got green, which is bar gaps, pulse, bar gaps, bar gaps. I should use a different color than that orange, but anyway. Again, it reads different things. Dominique asks, can I show a 4-range ultra bond chart? Sure. Let me just take off this pulse and switch this to ultra bonds. We got to a 4-range chart. Open this up. And that's Friday. With ultra bonds, You could also use tick-based charts with ultra bonds. 50 or 100 tick chart is nice on ultra bonds. This is a 50 tick chart, no, sorry, a 100 tick chart on ultra bonds, right? That's Friday. This is the day before. I mean, it's just a different way of looking at the market, but ultra bond or range is sort of getting back to your question. That's what it looks like. And again, maybe if you want to turn off the zones, just to clean it up a bit, again, just change the opacity back to 0, and just to see the signals. When your bars sort of overlap like this, like these candles, you just go in here, you change this bar width to a different number, to a smaller number, right? So you can see they're not overlapping. So, the day before, right, this was Friday, kind of a muted trading session. Basically, we're trading 15 down to 26, but the day before you had much more movement. So we'll move up, we'll move down, we'll move up, move down, move up, move down, move up, move down. Let's go through some more questions here. I don't want to keep you guys on all morning. It's Sunday, so let's take a look. Okay, Robin. Robin. Yeah, I'll get that sorted out, Robin. Can you show, Gopi asks, trying to understand this. Can you show delta for the bar gap zones? I don't think it really, okay, let me see here. That was a simple way to do it. Just bear with me here. I could do is this. I mean, generally speaking, when the market is, you're seeing sell signals come in, right? You're going to normally see negative delta. These are just delta candles, if you will, right? The delta in the bar. And I could put the price, the number up there, but it's the same thing. Okay, so you can see the positive delta coming in here. Because remember, right, if you have the actual sell signal, it may have started one bar earlier, because it's also looking at the complementary order flow coming in. Let me see here. Brandon asks. Hang on. Just writing down some of these questions here. Because Ethan asks delta scope. Okay. Ethan, I see your question about the delta scalper. It's not related to this, but I'll address that afterwards. Same with you, Robin and Enos. Brandon asks, he says here, the reason what's the secret logic behind this? The reason I ask is that right now just seems it's an indicator that is blindly followed, reducing subjectivity that is should be a priority. Perhaps this is getting too close to secret sauce. With that said, your strength's always been one. You explain the reasoning why. Okay, well, without getting into sort of the mechanics of it, right? When you have a gap, you do want to pay attention to how the order flow is appearing in that bar. Okay, because there's really two steps to it, right? Because it's one thing to say, because I see a lot of people saying, oh, you have a gap, right, between, say, this bar and this bar. But what's taking place in these bars in the order flow, right? Do you have supply coming in? What's the aggressive selling looking like? how is volume being distributed? Okay, just like here, this bar, you technically have a gap between this, and this, right in here. But what's happening in the order flow in these bars, to me, isn't good enough, right? The market came right back up through that gap, right? Because the gap is taking place right here. And you can see big burst coming up right through the other side of that gap. So you want to be paying attention to how this bar, since it's a buy, right? Obviously, actual imbalances. You want to see demand coming in, and you want to see volume reacting accordingly. Robin asks, yeah, it doesn't need tick replay to work. So if combined with an indicator, no, it won't change anything, right? So the signs will be the same, the signals, the zones, all that will be the same, whether you're using the tick replay or not. James Janelle says, I use Unirenko, NinjaRenko, not NT. Yeah. Yeah, it should be fine with the Unirenko chart. I know I got Unirenko on a different PC, so I can't show you on this one. Timothy asks, is all price action contained in the process of, I guess you meant to say sequence, alternative, and iteration? I'm not sure of your question there, but it's not just price action. It's also what's taking place in the actual order flow over that period. Dominique, I did show the 4-range chart. Mike, please. David asks, I got a bundle. I do run sales throughout the year where it's like, between 25 to 50% off of everything. I think I ran one earlier this year. Be on the lookout for that. It'll be coming out probably next month. I do have, just as a side, David, since you're asking this question, because people always ask me, they see, this is sort of unrelated to it, but right, they see a lot of stuff in here, right? And some of these things I've released, some I haven't. Things like pressure, imbalancer, etc. I've even got some that's like what is it? Initiative traders, responsive traders. Maybe like within the next month or so, you may see an email from me about a bundle, sort of my vault, things that I haven't released, but I'll just shoot them out in one big package down the line. Problem is, creating the user guide, all that stuff takes time. But anyway, let's go through some more questions. Will it work on higher time frames such as 30 minutes, 1 hour to get better, strong zones to trade from? Well, I showed you 15 minutes, 30-minute chart. Let me just draw the zones out. Again, it's going to depend on your market as well. Make this 30. Let me take this off here. This is a 30-minute ultra bond chart. Okay, so you see a zone here, a zone here, a zone here. Obviously, this one here. It's just the last few days. I don't know about 1 hour. I haven't looked on a 1 hour chart. This is the 1 hour. Maybe if you're looking at something that trades, even though bonds, this is ultra bonds, something like a currency that trades, literally around the clock. This is a 1 hour chart. You trade in this zone, it stops you out. This one stops you out. This one comes right back up to that zone by a couple of ticks. But again, you're trading that through a number. It's nice to see this, but in all honesty, I wouldn't. I'm not sure I'd be looking to drop in a limit order in here, when, what was that, PPI on, this was Thursday, right? PPI came out Thursday. You know, if that's something that I would do. I know a lot of people say, well, look at that. You could have sold it there and had that big move. But again, you know, I'm not looking to trade around a big number like that. But again, this is down to a 30-minute chart. So again, it really depends. Denise asks, yeah, we do have a trading guide. I don't provide recommended settings because there's not a lot of settings that you're going to be adjusting. More going to come down to your, you know, your chart type, right? So, you know, 3-minute chart. I don't know. You look at a 3-minute chart, but I'm sure there's people out there that do use a 3-minute chart. Okay, this is what it looks like on a 3-minute chart. You know, maybe some people use an 8-range chart. This is what it looks like because there's not, the settings don't need to be adjusted. You just really, all you're deciding is you're using type 1, type 2, or using both of them. Right? You can see I got everything on both. Show signal, so you can see the triangles and the pair up. That's it. If I had just type 1, okay, that's type 1. So it's pretty simple. NK asks, can you talk a little bit about how this indicator works? Yep, I just did. When will this be launched for Go charting? I'm not sure because we got our launch of the Orderflows Trader coming out soon. Abraham, thank you. Brandon asks, thank you. Your explanation put some logic behind it. As an aside, the recent video you did in regards to aggressive buyers, aggressive sellers, passive, is incredibly helpful. Yeah, you know, that's, I'm glad you're watching my YouTube videos. It's a simple thing, right? The concept of aggressive buyers, aggressive sellers, it gets overlooked a lot. Everyone thinks that the market, you know, buyers and sellers are always the same, but again, it sort of digress a little bit. When you're looking at order flow, right, you always want to be sort of identifying how the trading is taking place. I mean, obviously, a market's going to go up on aggressive buying, but stronger moves up are going to be followed not only with aggressive buying, but supportive buying, you know, passive bids coming in. I mean, perfect example is this move right here, right? We're going up. Okay, yeah, you see the aggressive buying coming in. And what do you see in this bar? 415, 436. Strong bids. How do I know these are strong? Well, I compare them to what's taking place on the offer. Heaviest volume on the offer is 408. The next one is 307. So the strongest bids are coming in here, just as down here, right? We make this new low, trades 87, right? Because remember, this market opened, this bar closed, this market opened up, went down lower, starts reversing. And as you're reversing, yeah, people are buying the offers, but you got a strong bid in here, 936. So you got some supportive buying coming in. All right, just a few more questions here, then we're done. Is the triangle marker down on the close of the bar on which it appears? It should appear as soon as the conditions are met. Okay. Does time of day make a trade? Does time of day you trade make a difference? No, I don't think so, because, you know, let's go back to a time-based chart here. A little bit easier to see time of day. Jared, yeah, it doesn't. It should appear as soon with the triangle as soon as the conditions are met. The zone, it's got to sort of wait for the bar to close for confirmation, but the triangles as soon as the conditions hit. So, like for example, right, this is Euro currency. This is at 1 in the morning Chicago time, right? Because I'm in Chicago, so my PC is set to Chicago time. Right, it's giving you the triangle there, right, to go up. If I was to sort of scrunch it down, you know, that sort of that Asian time to me is kind of a dead zone. Sort of that time from the reopen till about you know, 7, 8 o'clock. To me, that's like the dead zone of trading. But you know, you can see some signals here. You know, it stopped out here, stopped out there Friday. But other markets that are a bit more active, there's the fascinating thing about the markets is there are, for example, okay, so this is euro currency, right? What's the most active times in euro currency? Well, obviously it's a euro currency, so when Europe is open, you're going to get more movement. But then obviously during the US session, during the Asian session, it's a lot quieter. If you're looking at the Asian session, trade Aussie dollars, 6A. I haven't looked at Aussie dollars with this, but let's take a look. What am I on? I'm on a 1 minute chart, right? This is during the Aussie session on Friday, right? 7 p.m. Chicago time. Nice movements, right? That was Friday. The day before, all right? Here, there's no signal, but you had that zone being drawn out where the market came right back to that zone and rallied. But in here, you're getting, we had some stuff coming out in Asia at that time here. But after it came out, nice move down. But in general, generally speaking, no. I think this is a indicator you could use around the time. Timothy asks, is the triangle basically a wedge? No, the triangle is just the signal, the plot, right? If I were to, let me turn off the zones. When I talk about the triangle, okay, you see nothing on the chart. Triangle is the signal, right? That's under the plots down here. Triangle up for buy signal, triangle down for the sell signal, right? Now you see them. Does the marker draw and redraw? No, it just draws. Shouldn't redraw. Bob asks, is your zone tool coded as objects or plots? I'm not sure, Bob. That's one I'd have to ask the programmer on how he did it. But I'll make a note of that. As plots or objects. All right, guys, I'll end it there for today. I don't want to keep you guys on all morning, or for some of you guys all evening. So again, if you are interested in this indicator, just really quick, that's where you can get it. Right now, it's only in $1.97, $197. So it's a pretty decent price. And again, it'll work with any other things you have on your chart, right? I showed it with a bunch of other indicators. And again, I think it's just a nice addition to have in your chart toolbox, so to speak. Okay. So thanks everyone for coming out on this Sunday morning. It's always great to connect and see what questions people have. Enos, Robin, Ethan, I'll take care of you guys. So have a great go Bears. Yeah, hopefully Daniel, hopefully after last week's debacle, they'll get things turned around. So hopefully it'll be a good game. So all right everyone, have a great rest of your weekend, what's left of it, Sunday, and I'll catch you guys next time. Bye-bye.